This is a relationship business at the end of the day. It's all about relationships and working with somebody that you like, somebody that you can sit down and talk with, right?
And welcome back to another episode of the Connector and Protector. That's me, the DELO. This is a show that I've put together. This is episode 4, and today we're going to do the topic of restaurants and accounting. You know, there's a lot that goes on that restaurants have to understand about when it comes to accounting and keeping their books together and knowing what their costs are and all the above. So we're going to talk about that with my good friend here, Mr. Brian Campbell. He was with a company called Henry and Horn that has now been, I would assume, merged or bought out by Baker Tilly.
Merged with Baker Tilly.
Tilly. He's wearing
10.
His shirt today.
There you go.
Tell a little bit about Baker Tilly before we get into the questions.
Yeah, definitely. So Baker Tilly's top 10 U.S. accounting firm, so definitely a larger firm. So we merged in December of 2022. And so offices in all the major cities, 25 offices across the United States. I am currently the leader for the restaurant and franchise industry group with Baker Tilly.
Nice.
And so that is somewhat of a new role under Henry and Horn. I was the leader for the restaurant group under Henry and Horn. And so as we came on, we were doing probably more marketing, business development in the restaurant world and Baker Tilly, and so they want to take some of the things we were doing and blow them up and kind of take them across the nation in different key geo markets.
Yeah, and you guys do a lot of in the accounting world, as I do in the insurance world. You do a lot of added value sort of stuff. So you and I both host a roundtable together that we had. You know, you were gracious enough. You guys had started it, and I kind of had my own thing. We're like, why don't we just merge these together? And we have a lot of restaurateurs that come and get a lot of great added value from that and share experiences, you know, with what they're doing. So it's a fun thing that we're doing. So what I want to do now is, you know, talk about 10, 11 things that restaurants can, or operators can have some takeaways and have it, live forever on YouTube. So no pressure, Brian. But let's start with, an obvious question. What should restaurants look for in an accounting company, CPA, like all the above? What are some of the characteristics that they should know or look for? Is it really finding a specialized person, and what else?
Yeah, I mean, definitely I would say that's probably the more technical answer, right?
Yeah.
Is somebody that works in the industry, that knows the industry. I mean, we do a lot of educational webinars, keeping on top of what's going on in the tax world, the accounting world, what's going on in the restaurant industry as well. And so we definitely devote a lot of time in that area to educate ourselves, which is different than probably a lot of your accounting firms, especially in Arizona, because they don't necessarily have a dedicated restaurant group per se.
Yeah.
And so definitely from the technical side of it, you definitely want to look for that, but also relationships. I mean, this is a relationship business at the end of the day. It's all about relationships and working with somebody that you like, somebody that's knowledgeable, obviously, but somebody that you can sit down and talk with, right? And that's going to go out of their way to help you out and always be there to answer the phone, answer an email, that sort of thing. Everybody's busy these days, right? And so it's easy to get ignored. But I think if you have a valued relationship, that can go a long way.
For sure.
With just bouncing ideas off somebody, brainstorming, that sort of thing.
And somebody that's, like you said, that has a lot of experience in the same genre. Even though they're an accountant or an insurance agent, they deal with a lot of restaurants, so they see a lot of possible situations and conclusions that they learn from that they're able to pass on to their clients.
Absolutely.
Yeah.
Absolutely. Yeah. I mean, I think relationships are, I value them very much. I think that's why you and I get along very well. We think the same way.
Right.
And with the round tables, it's about what can we give back to the restaurant community, right?
For sure.
Which is, I see that as a relationship thing as well, and valuing relationships and what can we do to help people. So
being hospitable to the hospitality industry.
There you go. I like it.
So is there and this is really not really a trick question, but I'm going to ask it this way because it's obvious. Is there a specialization when doing accounting for a restaurant? So like, obviously there's things that have to be understood in this sort of business as opposed to somebody that runs a stamp store or a gym.
Yeah, I would say, again, going back to understanding the industry, really understanding the numbers and what expenses are being incurred, and do those expenses meet industry norms?
Right.
Looking at the industry guidelines from what percentage of revenue should your food costs, labor costs be. I don't think your generalist CPA accountant are always going to be in tune to that, and so definitely specialization from that side. There are some of those technical tax topics out there, like the tip credit
Right.
that is low hanging fruit, right? That you would think everybody should know, but it's surprisingly how many clients we get where their current CPA is not taking advantage of the tip credit. I mean,
We're gonna dig into that.
That's
yeah.
an easy, like, hey, we can save you right now like $50,000, and
Yeah.
people sometimes, bigger firm, our fees are a little bit more, but the value we can bring in other services and how we can save money and planning and other stuff, I think is, I say accounting is not rocket science, right? I
Right.
mean, for some people it is, right, left side of the brain type thing, but I think it goes back to specialization in the industry and knowing,
The
some of
industry itself.
the industry itself, and how to help interpret that for people when you're looking at their financials or their accounting numbers, and doing their taxes and that sort of thing.
Okay.
So.
Well, let's talk about some of those specializations and those types of costs. So the first thing I think is always on top of everybody's mind that has a restaurant is going to be labor and food costs. So how many people that are actually running a restaurant understand the dynamics of those two aspects that you see in your business, and how important are they in the overall scheme of it?
Yeah. I think people understand them, but do they know how to, read their financials to be able to say, okay, where am I at on a week-to-week, month-to-month basis?
Yeah.
I think that's probably what gets ignored, and it doesn't take that long for the numbers to start going sideways before all of a sudden you've lost, $50,000, and it's like, hold on a second, what just happened in the course of a couple months, and so, labor, food costs, I mean, that's huge. I think, you do have operators out there, and I would say, again, when you're under 5 units, you're probably inundated in your business and the day-to-day operations where you can kind of lose sight of that a little bit.
Right.
As you start growing and you're, 5-10 units, usually you're building out a corporate structure, and you probably have other corporate people there that are probably looking at the numbers on a daily basis.
Yeah.
And so you're a little bit more in tune to it from that standpoint. And so, but yeah, I mean, those are your two main drivers for sure. So it's huge.
Yeah. Can you explain for people that may or may not know, or maybe not have a complete understanding, which you had talked about earlier, the 80/20 tip credit and how that works for restaurants?
Yeah. So, the 80/20 rule is what we call it. I mean, this goes back to probably the mid-'80s, I think, where the DOL, Department of Labor, started issuing these rules on how much time, servers can spend on certain duties that they're doing within a restaurant. And so basically the 80/20 is that, servers, you have the tip credit. And so the tip credit allows the owners of the restaurant on their tax return to be able to take a tip credit on their tax return because, you're paying your waiters, $3 under the minimum wage, and then they have to declare their tips. And so as a business owner, you have to pay your FICA on the employer portion of FICA on the tips that your employee declares. So as an incentive to help your employees declare their tips, in return, as an owner, you can get a tip credit on your personal tax return.
Okay.
And so as kind of going back to the 80-20 rule, that's kind of the tip credit side, right? But then the 80-20 says, hey, you can pay your servers $3 less than minimum wage, right?
Yeah.
But and you're going to make that that difference between minimum wage up with the tips they make.
Right.
But 80% of their time needs to be spent on being a server. And if they spend more than, or less than 80% of their time doing server duties,
Right.
then you need to pay them a full minimum wage for that amount of time that they're spending doing other non-server duties.
Clear as mud.
Right.
And does
Total
anybody
cluster.
track that? And have you ever seen anybody get in trouble for this? I mean,
I have not. I don't know how you would go about tracking it, to be honest with you.
Crazy.
I think that's the thing that everybody out there is like, you want us to do what? How do we
Right.
track this? Like, you want my server to keep track of every minute that they're doing some duty?
It's like logging your mileage in your automobile book when you're going, on an appointment. I mean, they come up with these ridiculous rules.
Right.
But obviously, there's some good to it if people utilize it.
Yeah.
Yeah.
I guess. I don't know. So, I mean, this has come a long way. Like,
Yeah.
I bet this rule has changed a half dozen times since the
Right.
mid-'80s, based off the administration that's
Yeah.
in the government, right? Things change based off the different administration. So this has flip-flopped several times, I think, as to, okay, you need to track it, you don't, you do. And so right now it's at the point where you're supposed to track it, right? And you're supposed to track what they're doing. And I think a server cannot spend more than 30 consecutive minutes doing non-server duties.
Right.
Which, I mean, it is very convoluted. And, I can't tell you, what is the best way to track that, and what is...
Look it up on the internet if you want to find out non-serving duties. So what are some of the best tax credits now that exist for restaurants?
Yeah, I'd say the big one that's out there right now that I don't think a lot of people maybe know about is the work opportunity tax credit.
Okay.
And so and it's good for the restaurant industry because you have so much turnover.
Right.
And what it basically does is it looks at, and you have to, it's an easy thing to do, but you have to have a process set up to capture the data. So really, when somebody first comes to you and applies for a job, you need to have a process set up to capture the information to be able to take advantage of the work opportunity tax credit, which we call it WOTC as I'll refer to it. And so, and what it is, it's a credit that you can get for hiring certain people. So whether they served in the military, whether they're an ex-convict, whether they are something or another, there's quite a few criteria. And so if you hire one of these individuals that have had this experience in their life, you can receive a credit, and that credit could be, I don't know what the bare minimum is, but it can be thousands of dollars.
Really?
The top credit.
Most people don't even know about this.
What's that?
Most people don't even know about this.
I don't think they do unless like their payroll company or like a CPA or somebody's telling them about it, or their accountant is. And so that's probably the credit that definitely is out there. I mean, you have the tip credit, which, I mean, we've talked about, and I think a lot of restaurateurs know about it, but we still run into it a lot with smaller restaurant concepts that the CPA doesn't know about it because they just don't understand the industry. What other credit?
And so like going to like government programs or whatever, I mean, obviously through COVID we had the PPP, we now have this ERC, we had restaurant relief. I mean, is there anything else out there that these guys can nab at?
From a grant standpoint,
Nothing.
I'm not aware of anything else out there on the restaurant side.
But those were the three big ones, right?
Yep.
Yeah.
During COVID and that sort of thing,
Yeah.
those were definitely the three big ones that were out there. I mean, a lot of states, counties, cities offered smaller grants, but a lot of those have pretty much dried up, I think.
Are people still applying for the employee retention credit?
Yes, they are.
Really?
Yeah. I mean, and it goes, I believe your last chance so that was for the year 2020 and 2021.
Yeah.
Right? So for 2020, I believe you have up until April 15 of 2024 to apply for 2020.
Okay.
And then for 2021, it would be through 2025, I believe it is. So,
Good to know. Hurry up
but
if you haven't done it.
caution to the wind. I mean, everybody hears the commercials, right?
Yep.
Everybody hears it. I mean, it's on. If you listen to Sirius Radio or whatever, it's like every 10 minutes there's that.
Yeah.
Hey, get $20,000 per employee, right? I will warn you. You need to be careful because the IRS is all onto these. They call them the ERC mills.
Yep.
And I watched a webinar this week that came from the IRS fraud department about how they are pursuing potentially fraudulent claims or claims where people were not eligible for it.
Yeah.
And some of these are coming from some of these ERC mills. And so there was another email I got today from that somebody forwarded me from the IRS. And so they're pretty much all, they say they're caught up with processing back amended 941s for ERC. So now they're going to start focusing on, looking at any that come in now, they're going to start looking at them harder, and then they're going to start looking at fraudulent ones, they say. And so just be careful who you use.
Absolutely. Yep. Let's talk about, I don't know anything about this, but it sounded interesting. What are prime costs? Cost of goods of service plus labor cost. Why is that important?
Yeah, I think it goes back to your earlier question about food, labor costs. So the way in the accounting world, when we take food costs, liquor costs, beverage costs, we combine them with labor cost, we call that prime cost.
Prime cost, got it.
Yep,
Okay.
and so that's where, your prime cost, you want to have a prime cost of, 50 to 60% typically is kind of an industry average. And so, what that's saying is that, if your, labor cost is this percentage, your food cost is this percentage, to be profitable,
Yeah.
the guideline is that should be less than 60% of your net revenues at the end of the day.
Gotcha.
So you want those costs as a percentage of your revenue to hopefully be under 60%. Once you start going above 60%, that's where something might be going wrong in managing your labor expenses or whatever it may be. And so kind of goes back to that initial question, why are they so important?
That's
That's
why.
huge.
Yeah.
Yeah.
And I know you don't have obviously solid numbers, but you probably have some sort of an indication on where a coffee shop or a nightclub or a fine dining restaurant should be as far as percentage wise to actually make money and be profitable. I know that when I ran a fast casual, if we were in the 9 or 11%, bottom line, we were doing pretty good.
Yep.
Is
yeah.
that,
yeah. Yeah. No. Yeah, I think, when you look at the bottom line, there is differences between the type of restaurant you have for sure. I think, quick serve, typically maybe you might, be a little bit more higher in your labor costs. Fine dining, your labor costs might be a little bit lower just because your menu pricing is so much higher.
Yeah.
So if you're serving a $75 steak, right?
And a $300 bottle of wine.
Right, that your labor cost as a percentage of your net revenues might be below 30%. But I would say still a good guideline is, 30% for labor cost. That might have changed a little bit since COVID.
Right.
Food costs, same thing. 30%.
Has that balanced out? Remember when we were having meetings about, food cost and people that were getting paid, 20 plus an hour to wash dishes? Are you seeing still those numbers? Or have prices just kind of increased to kind of make up for that?
I think prices have increased to make up for it. I think the labor dollars have leveled off a little bit. Now, that doesn't mean that they haven't come back to where they were, and I don't think they ever will go back to where they were. Right? I think you're still going to be paying, in the 20s probably for your back of house labor, probably whether you like it or not.
Yeah.
But I think some of that being able to find employees is a little bit easier, whereas before it was hard to find employees, so you had to pay more.
Right.
So I
right.
think that has leveled off, and so you're able to control, what you're paying people, because
Makes sense.
the labor pool has expanded a little bit more. So I think it's eased a little bit from what I've heard and what I've seen from my restaurant clients, but I think they're still struggling with labor dollars. I
Yeah.
think food cost, I think it ebbs and flows depending on whether it's eggs, beef, chicken.
Yeah.
And what's the hot topic,
I was talking to somebody the other day about chicken, and you probably remember, you're close to my age, the days that you'd go pay like $1 for a wing, or even,
Right.
I mean, there
50
were times,
cents,
50
right?
cents.
Yeah.
Yeah. I think I even had penny wings at like in Atlanta, Georgia when I was a kid. And so I was asking them, like, how much do you charge for your wings? And I think they were like, telling me they're like $15 or something like that. And I'm like, okay, how many wings do they, and it used to be like you would get a dozen, but now you're getting 7,
Yeah, right? Yeah, that's what I was
and then
gonna
after
say,
tax
yeah.
and all that's like $17, thing of wings, that
Right.
is it's crazy.
Yeah, it's an appetizer, not a meal anymore. Right?
Yeah.
I mean, you could have a dozen wings and be like, I probably don't really need anything else. Now it's like, here's 6 wings, and hey, I need to get something
Now I
else.
got to get
still,
something
right?
else.
Yeah, $40 burger and wings nowadays.
Well, people are still going out to eat and they're paying it. So
I know, the industry's strong.
It
I mean,
is.
it's very strong. It's doing well, especially here in Arizona. I think it seems like it's doing. We're in the heat of the summer, right? So
Yeah.
it'll be interesting to see. Literally the heat of the summer.
Heat of the summer.
Yeah, but it'll be interesting to see how this year works this summer, because I think the last 2 or 3 summers
Have been really good.
have been good.
Yeah. Now everybody's gone.
Right? Everybody's out traveling. International travel has opened up. So I'm waiting to hear from some of my clients, how the summer has been going here now that we're in July, and see how July results come out to see.
Yeah. This is our winter.
Yeah.
Let's talk about something that nobody seems to understand, and let's talk about how the tip pool works and what it is.
Yeah. So tip pool. I'll start off. There's tip sharing and there's tip pools, right?
Okay.
So tip sharing is, when your server's splitting tips with the bartender, the busser, that sort of thing.
Right.
And so with tip sharing, people do share tips, right? I mean, that's just common in the industry. And so, how you go about doing that, you should have some methodology behind how you do that, and documentation and that sort of thing. And then when we talk tip pooling, we're talking about pooling tips and sharing tips with the back of the house. And so in your question, I'm assuming you're saying tip pooling as far as sharing tips with the back of the
Yes.
house, probably?
Yes.
Okay, so the thing with tip pooling is, and the biggest thing from an accounting tax perspective is that if you share tips with the back of the house, you're not eligible for the tip credit. So who it really impacts is the owner of the restaurant, right?
Gotcha.
Like, does he want to give up that tip credit in order to enable all of his employees to pool their tips and share with the back of the house?
Okay.
Now, the other thing more from an operational standpoint is you got to get your servers comfortable that they want to share tips with the back of the house, right? And so from an accounting tax standpoint, what you need to think about, I mean, tip pooling, there's a lot of documentation, internal documentation that you need to have in place to protect yourself from the DOL if you get a DOL wage and labor audit.
Okay.
Because they're going to want to understand, okay, what is your process for sharing tips? Are people still making the minimum wage, like your servers, if they're sharing tips with the back of the house? Are they still making the true minimum wage?
Yeah.
And so you should have a very well documented, accounting love
I'm
spreadsheets,
sure all hospitality
right?
people have that.
Oh, I'm
yeah.
sure they do. And so not some back of the napkin thing. You do, if you're going to do it, you need to make sure that you have a process set up, that you've informed your employees what you're doing, because that is a big thing from the DOL, that, hey, you have informed your employees how the tip pool works, how you're going about, instituting it and that sort of thing. And so they really have to buy into it.
Yeah.
And so that's a huge piece of the tip pool for sure. other than just the tip credit that the owner's losing out on.
Okay. It sounds like they need some software for that.
Oh yeah,
Ah.
right? There's definitely
Interesting.
I think there's probably some software out there. I don't know.
We'll talk
I mean,
about that.
you could.
What's some really good software? I mean, that aside, what's some really good software that restaurants use that you see that really helps you guys when doing your job? You know, besides like a POS system and stuff like
Yeah,
that.
yeah. I think on the accounting side, there really is probably one accounting software out there. It's Restaurant 365.
Okay.
There used to be two. It used to be Compete and Restaurant 365, and then Restaurant 365 bought out Compete.
So there's
now
no
it's
competition?
There's
Yeah.
no competition really. So there's another one. If somebody wants to develop some restaurant accounting software,
Interesting.
I mean that would be a money maker probably. Most people probably or smaller restaurants are using QuickBooks,
Yeah.
right? Restaurant 365 has a price point that probably doesn't make sense for your smaller restaurants, so they're using QuickBooks. So you're going to be somewhat limited in what you can do with QuickBooks just because.
Yeah. So how does a Restaurant 365 work? Is it something where they scan in invoices and it reads it and
They
puts
do,
it in a chart?
they do have that capability to do it. Plus, they have labor modules where, you can control and monitor your labor costs. They have inventory modules where you can measure your actual food costs versus your theoretical food costs.
Okay.
Now, those softwares are out there if you use QuickBooks. There's third-party softwares out there that you can use as well. One, like on the inventory side, one of our favorites is Cogswell.
Mm-hmm.
The one of the developers, he helped develop Compete.
Okay.
So I'm pretty connected with him, and so I know some of my clients use Cogswell. But it just, that actual versus theoretical food costs, and then helps you monitor that your vendors are charging you the right amount as well.
Right.
Because I think, the vendors, the food vendors out there, sometimes you got to be careful with prices changing from invoice to invoice and based how you entered into your contract. Some of your contracts may lock you into certain pricing. So that's the benefit of some of the softwares, but
and restaurateurs are busy enough. I mean, track unless you have somebody that's really dedicated to that. I mean, these mom and pops don't. I mean, it could be good for them. I mean, I would think the sweet point for somebody really getting screwed is probably 2 or 3 restaurants because you're not big enough to have that full-time person to look over all that.
I think
if
you're
you're
right.
a one-person operator, you're like doing too much at once.
Yep. Nope. I think you're right. Yeah, because when you have that 1 or 2, you're living,
You're
breathing,
living it all.
right?
Yeah.
You're there day to day. You're controlling it. But as you get to your 3 plus, you can't spread yourself, right?
No.
I mean, it just doesn't work.
Doesn't
And
work at all.
All
right.
Yeah.
Well, my last question for you today would be, when restaurants are looking to increase their valuation of what their worthiness of what they're doing. I mean, what are some good tips besides I would assume buying real estate or doing other things like that? What are some stuff that you see with some of your most successful clients that have really created a brand and a valuation that they'll eventually have something to be able to sell as opposed to closing down and just having a liquor license sitting there with nothing really to sell other than penny on the dollar equipment.
Yeah. No, I think if you're looking at the value of your restaurant, a lot of times it's measured by your cash flow and your EBITDA, right?
Yeah.
So, typically how that works is you measure it by a multiple of your EBITDA, whether it's 8 times your EBITDA, 10 times your EBITDA.
Yeah.
And so, some of that goes back to controlling your costs, like we talked about, your labor cost, your food cost. I think your management team, if you do start growing, having that management team in place can definitely help you drive up your EBITDA, control some of your cost, which can help you increase your valuation. I think if you get to the point where you want to franchise, that becomes pretty big because the value in your franchise is your intangible asset.
Yeah.
Your intangible asset is this model that you've developed that you can go out and sell that may not necessarily be tied to an EBITDA, just true profits and losses.
Right.
And so how much cash flow can you generate based off this franchise model? So that's, in the franchise world, if somebody were to buy or sell I'll say buy a franchise concept.
Yeah.
What we do is we go in and we have to mark that to fair market value if we're doing like audited financial statements. So we have to have a valuation to determine what's the value of that intangible asset. Because if you're the original franchisor, you're not paying money for that. You're paying lawyers,
Right.
but the value in that doesn't get recorded anywhere on your books. It's just a value that grows as you continue to open more franchises. So I think, the franchising is a good kind of play if you can make it work.
Yeah.
It's a lot of work if you want to grow and take your concept to the next level where you can get a lot of value. But management team is huge, controlling cost, the franchise side of it. Real estate, like you talked about, always maintains value. That's probably the one constant.
McDonald's.
Right?
Yeah.
Yeah, they're a real estate company, not a restaurant company,
Right.
And so I think real estate is the one stable investment over time that probably you're never going to lose money on.
Yeah.
So if you can kind of get some financing or you have some, money laying around, that's definitely a good way to increase value as well.
No, I like that. Well, that's awesome. I appreciate you coming by. Any closing thoughts or anything that...
I don't think so.
No? Good. We covered
I
it?
don't know. I think we covered it.
Where can people find you and how can they, we'll put stuff in show notes, but what do you prefer?
Yeah, no, email, call me, text me. I'm pretty open to whatever.
Perfect. We'll put all
give
of
my
this
cell
stuff in there.
phone, my email. Yeah, it all goes in there. But yeah, no, I think...
He takes 2 vacations a year, and that's after deadline and after deadline.
Yeah, pretty much. That's it. No. I'm actually going hiking next week. So
good for you.
Yeah, so a backpacking trip for 4 days. So that one's in the middle to get out of the heat, I guess. Maybe.
Yeah.
I don't know. But yeah, no, I think, I think it goes back to just relationships. If you don't have a relationship with your CPA or accountant, hey, that's my go-to, and develop a relationship with them or find somebody you can have a relationship with that can.
Because you and I ain't going anywhere. This is what we do.
No, I know.
Well, that's been great. I appreciate you coming by and sharing your knowledge.
No, thank you very much for having me.
Thank you, everybody, for watching the Connect and Protect program, episode number 4. And until next time, we will see you later. Peace out.
See ya.